Tons of news after the bell, but let's just get to the basics and go from there. S&P 500, you're still in this range, but we're seeing a little bit of a development here, and I think it's worth talking about. So we can see our close right here on Friday, and then Monday and Tuesday. They're all staying in the same range. Even Thursday, you can kind of see this, right? Ever since this bar that happened on Tuesday, the 15th, we really cannot come out of that. So if we just do ourselves a favor and look at this and say that this bar is in control, it's telling us something, but we're also getting a couple more data points, and I'll show you what I mean by that. Meaning, note how you're unable to get above this, or when you hit it, it becomes resistance. And at the same time, you've been unable to break through this, and this is becoming support. So you're really trapped in here between that 58.51 and 59.1675. You cannot get out of it. Now, historically, these particular patterns I love because down, up, 1, 2, 3, and then down. Usually you have these rising 3, falling 3s, and historically great patterns to have at the tops or bottoms of charts, and because they mark a either top or bottom, and you can work off of that. But what we had here, and we're going to talk a lot about structure at first. What we had here was really simple. We had a bar, and that bar closed 50% above that wick, which means you had net buyers on this bar. Therefore, this bar cannot be viewed as, in my opinion, bearish because you had more than 50% of that range was bought. You can do the same exact thing here and see it. So what are we saying here? Well, despite these being red, what you are seeing is anything with a wick is rejection, meaning I had no sellers here. So even though I had green in here, I had sellers, right? I don't have sellers in here into the end of the day, do I? Or I wouldn't have this. Therefore, it's telling me that this is getting tighter and tighter despite what it looks at. Now, if we get into this on a 5, one of the core things I did on the 15th, and I did this pre-market, and I would suggest that you watch our pre-market videos live. If you can't join us when we do them live, I'd suggest that you watch them. But if we go to this 15 level where we saw that original drop from the 15th and we measure that bar in this range and we look at this area, well, you're starting to see some things really develop here, aren't you? Right? You can see that demarcation line. Are we above it? Are we below it? And you can see how that's playing out. That's playing out quite nicely right now, isn't it? So what we're trying to look for is just watch that demarcation and see how it's going to go. Now, if we clean this off and then we zoom out for a moment, we go to an hourly, you're starting to see a little bit more structure here again, and we're looking at this breakout. Now let's get to this breakout right here on the 11th, Friday the 11th. And you can see how since that breakout, you really have not been able to get below that 58.64, and you just keep testing it over and over again. And then, of course, you would just have the top up here as well. Now, this is where, to me, it gets interesting because the question is, we're not able to break out. We're not able to break down. So what's really happening? What I think you're seeing is, I think you're seeing rotation. And I think you're seeing rotation back into the same old, same old. And we're going to get into this in a little bit. But what is the market really telling us? So if we go and take a look at the 10-year Treasury, for example, and we take a look at yield, we're seeing the yield rise. And what we're hearing from everybody from Druckenmiller to Paul Tudor Jones, they are all saying the same exact thing. They are all saying that it's not possible for us to think about them cutting rates anymore because we're dealing with inflation. And this is exactly what we're seeing. Druckenmiller says he's staying short U.S. bonds and staying out of China. Paul Tudor Jones today saying, I'm long gold and Bitcoin, thinks inflation trade's back on. That inflation trade obviously is going to lead to higher yields. If you listen to Paul Tudor Jones, and I would look this up on that CNBC interview, it was really very good. It's about 20 minutes long, and it's definitely worth your time. But what we're seeing is this is pretty much the mid end. But if you go and take a look at the long end here, that long end, if you take a look at TMF and just look about the people that shorted this, really when you look from that 65 on down to 67, I mean, it really looks like we're heading back to that 62 level. Now, we'll see what happens in the next couple of days. But what we're starting to see is, okay, well, what gives? We're starting to look like we're going higher on yield, and that is a problem. Now, there's a couple reasons for this. But the looming deficit is one, but also what's happening is you're seeing other countries are going to have to cut rates. ECB is all over cutting rates, and we're seeing that right now. We're seeing that in great detail, and to me, it's actually becoming, in my opinion, a little bit more of an issue that's even being reflective in some of these names right now. So I think that's definitely something that's of interest. Obviously, when you see what's going on with Japan, That is becoming an interest as well. And you can just see how weak Japan has been in here. And now they have to raise rates. So all this is going to lead to more instability with more selling and pressure on our bond market possibly. And this is definitely something we want to look at. But look how strong the dollar is. I mean, the dollar has been on a tear. So if you look at the dollar really from that September 30th date, and then you kind of take a look here for a second, or not kind of, but actually take a look from September 30th on. So all they've done is gone long the dollar and sell what? Treasuries. That's all they've done. And what is that leading to if we go and take a look here and go back to the ES? And I think that this is really what I want to bring home and look at the market. What's the market really done since that day, right? And this is really that area where it's done. So let's go into this just in greater detail before we jump into some of the news that broke tonight. So we have to get into an E. coli story, why Texas Instruments is up so much after hours, and why ENPH is imploding, and what's good for semis tomorrow. I think there's a lot that's good for semis, quite frankly. But let's just look at this and go, okay, well, here's that bar, and then here's that control area. I find when you find these bars, and people always say to me, well, how do you find these control bars, and why are they control bars? To me, control bars are relatively simple to see, probably from doing this for 25 years. But if you look at something like this, right, and you have a bar that encompasses several days. For example, this bar encompasses from everything over until the 20th. So you have 10 days, right? And then I can't get over this bar. That bar is in control. And then you'll see that low. And what you're trying to do is make sure you hold it. And then you finally flip it. And once that bar is broken, the spell of the control bar is broken. And now you have this bar that is the leader. And then you can see you flip. Little 3-bar pattern, 1, 2, watch the doji, boom. NVIDIA is doing the same thing. You might want to watch it tomorrow, but we're going to get into that in a little bit here. The most important thing to get is that since this date, this is really what we've been dealing with. So then you would go, okay, well, what's really been moving since that period of time? What we're trying to do, guys, as always, is we're trying to connect the dots. And this is pretty interesting because you go to that October 1st date, and if you look here, this is FNGU, and I understand that this is a 3X fund, but if you look at FNGU here, and we did something as simplistic as go FNGU relative to the SPY, and we just take a look at this, you would have to say that FNGU is outperforming. A matter of fact, if you took a look at this and said, how's it been going since October 1st? And you would say, well, let's go take a look at that and go, okay, well, you're up about 14%. All right, so we're up 14% by going long FNGU and short the SPY. And then if you took a look at something like this over a longer period of time, let's say since 24, of course you're going to be up because we've had a banner year, but have we really been having that level of outperformance? Not really. I mean, you could actually say that, see, it sold down here in August, and you can see the highs and the lows, and you can see how you leveled off here for a period of time, had some, blow-offs. Obviously, this is July 11th where we had that negative CPI. But why are we getting the outperformance? And this is where it gets really interesting. At least for me, it does. And I just want to go through this. When you have the inflation trade like you have right now, which is being put back on, there are certain staples that happen with that. And I'll tell you the basics. Commodities go higher, so gold goes higher, silver goes higher. Everybody can see that silver's breaking out and gold's breaking out as well. Eventually, copper will catch up as well, and you can see that sitting down here. And if we put in the simplest of indicators, and we just drop this down from a 22 to a 12 and a 55, we can just see it basing in here, and that's fine. You also always want to look at something along the lines as crude oil, and crude oil has its own little dance right now with Saudis saying they're going to dump. We're going to dump a bunch. We're not going to dump a bunch. We have a war going on. We don't have a war going on. There's so many inconsistencies here. It is beyond crazy. And this is really leading to oil doing its own thing. So quite frankly, the energy trade, I'm staying away from. I like simple. This is relatively simple. It just goes higher. So maybe I should look at those, right? But there's something else going on here. When the inflation trade goes on, what happens is that they go into flights of safety. They go defensive. Well, believe it or not, the Magnificent Seven is actually a defensive trade because of the amount of cash that those companies have. So what you're starting to see is this is actually setting up to break out, which is really kind of interesting. But we saw this today, and there's obviously other reasons for it. And please comment on this video. It's really important to me that you guys get these concepts and I'm explaining them accurately. It's why I do these videos. So your comments are always greatly appreciated. So is the sharing, I can say it. And purposely, if you keep it up, I promise not to run ads on here, which the algorithm loves in order to share it more. But just keep sharing this. on social media if you find value in it. If you don't, then don't share it. But that's on you. But then, I don't know. I think you should find value in it. But anyway, you can see your little DTL here. DTL stands for downward trend line. But watch this on the volume scale. I thought this was fascinating today. So here's the vol. Here's all my little scans, right? And then I just do the simplest of things and drop my line right here and go, okay, well, let's look from 24 over. So then you see the green out here. Okay, 1, 2, 3, 4, 5, 6, 7, 8, 9. So if someone's going to tell you that you were going to have somewhere, I'm not going to do it exactly, but between the 6th or the 10th greatest volume day ever of Microsoft was today in a low volume area, you're going to think, well, why is that, right? And I think that's very important to get. Now, does it set, rebuild, and go higher ahead of earnings? I think so. And quite frankly, it usually does really well going into a stronger dollar because people misguide it. They misguide the earnings because of the commodity exchange. Usually a strong dollar, Microsoft looks pretty weak after the quarter, and then it's explained on the conference call, and then the stock goes higher. That's usually what happens. But you're seeing it everywhere. And you look at like Meta making a little bit of a reversal today and finally making a higher high after about 7 days as well. And then we saw the Apple sell-off that was just bought consistently all morning. And now you're at your second highest close of all time. So you're seeing the money flow into there. Google's doing Google things, but even that kind of figured out that it would follow along today. They do have a weight over them. I get that. But do we have real leadership? So you go take a look at the XLK. I don't really view it as leadership as much as you're stagnant. I view it as rotation. And I think that rotation, when we did the new highs, new lows, I think when we did that on Saturday, and I'd go watch Saturday's video again, I'll link it at the end. I think that that's really where the metal's meeting the road right here, is it's the rotation that people need to pay attention to. And the new highs, new lows are picking that up, why people are not understanding how the trades are changing. And I'll give you an example of what I mean by this. Look at the home builders. Home builders are done. And the reason for that is because they're not going to cut rates anywhere near what they think they're going to cut because of inflation. They're not going to be able to. A matter of fact, I think what's really going to wind up happening here is we're going to find out that him cutting 50 basis points, Powell was probably going to be one of the single greatest boondoggles of all time. And I think he did it because he was getting a bunch of pressure to do it, quite frankly. And the one issue with that is no time in history have we ever had 3% GDP and had somebody cut rates 50 basis. We've talked about the chart a lot, and right now we're heading into increased productivity. We're not seeing signs of recession right now, but I would watch this tomorrow. These names are all setting up. They're all setting up to come in. And that's a pretty big break today. And what this is telling you is that that's where this is heading. This is heading to a little bit of a lower area. So you just really want to watch here and then start watching how this is paying attention. When these names, the home builders, the easiest way to do this is find the ones that are trading at 2 times book value. And usually you can spot those pretty quickly. The high flyer is always GRBK. And that's really the one that you would probably be looking at shorting the most. It's certainly the one that I would be looking at saying, okay, well, this is the one that I'd be interested in shorting the most for sure. It's actually going to go into my top 10 list for tomorrow. So we'll probably go over that on the pre-market public video. And I would watch those. It's a lot of fun. And we always go over other people's ideas because I know that I can't watch all the names. There's 8,000 different names. But this is what you want to do. You want to go find the highest book values of the home builders, and then which wink, wink, nudge, nudge. And then after you find those, you want to sort through those, right, and go from there. And I think that's the way to go about doing that. If you're super aggressive, you just short nail, right? It depends on how aggressive you want to be. Sometimes I get a little frisky and do things like that. I like doing that. But you can also go out there and any of those names or ETFs and buy puts as well. Some of the easier names to do with some of these sector ideas. I tell people if you're scared or whatever, you just do the sector bets. You can just literally just do sector bets and lever that way. It's very simple. I'm not giving advice. I'm just telling you information, education, what you do with it's entirely up to you, obviously. But these little gap downs, they're telling you what's coming, and it's not rate cuts. And I think that you're seeing that. But there's also some other things going on under the hood that I think are really important. And I hammered some of this on Saturday, and I think I should touch base on it just a little bit more. Now, on Saturday, I showed this, and this is the Smart Money Index. And what this is showing, and I went back all the way there, and again, I'm not going to go back all the way so you can see it, but you see this date right here? This is October 23rd. And since this date, what's happening is that this has ripped and hit all-time highs. Now, you're going to say, well, the market's hitting all-time highs too. This doesn't measure the market. I'm going to show you the measurements and how this is done. And I'm going to explain why I'm showing this, because I think this is really important. So the idea behind this was a money manager called Don Hayes. And what he does is he basically is coming out and saying, I want to do whatever retail is not doing. Right? So whatever retail is doing, I want to do the opposite. Whatever institutions are doing, I want to do that and more of. What this has led to is his calculation of this. Due to the assumed tendency, we want to bet against the opening action and bet with the closing action. The way we calculate is to subtract the performance of the cash index in the beginning of the first half hour and add the performance of the last hour. Let's say smart money closed at 800, and he gives an example of how to do this. Bottom line, if the S&P's up in the first half hour, and down at the end of the day, obviously that's negative, but you can see the calculation here, and I'm not going to bore you with it. This is what I want you to take from it. And I will link Saturday's video at the end of this. And in that video, I go into greater detail on this with more charts. I'm just not going to do all that, but I want to rehash this one part. What I'm seeing, and I see it in our community right now, and I see it when talking to people, and I literally get hundreds of emails a day. It's kind of cool. But what I find fascinating here is this. In no time in history has retail been selling the open and institutions been buying at the end of the day than for the past year. This is the definition of retail being in disbelief. And this is very different than smart money, dumb money. And I think this is a very important concept for people to get. And I'll explain why it's so important. Institutions are constantly committing money to the equity side of the market. Retail is the one that's getting out in the beginning of the day. And this is telling you at no time in history has this divergence ever been greater. Does that mean that the market's going higher? No, but what it does mean is that retail surely is not fully invested. And despite the extreme greed readings and whether or not they sell back down and go sideways, whatever, the one constant from that October and once he stopped raising rates, the one constant, no matter what you can say here, is the market has consistently gone higher. And I think that this is being lost on a lot of people. This is why I tend to focus on that stool with the macro, the fundamentals, and the technicals, because this, quite frankly, is a technical phenomenon. And it's just been ripping. And I don't think anybody's truly getting the magnitude of this versus where it's been. It's very different. In here, we had institutions and retail that were battling it. Sometimes one was winning and the other one was winning, right? Someone was buying at the end of the day, then they're not buying at the end of the day. And you can even see that here. If we took this peak and looked right in here, you could say, well, yeah, you still have a little bit of a battle going on. And then towards the end, we're just watching the puking, right? And then the rally, and then you can see the fade. You would know that you're going to fade because you know that institutions are selling at the end of the day and retail's buying, right? And then you can see this turn. And then from that turn, you've just done nothing but lift. Very important concept here. And the important part that I'm getting at is the disparity between what retail is doing at the open and then what is happening at the end of the day. And then maybe what you might want to do is to change your strategies that you're doing in the first half hour to hour to mimic something like this, and then maybe change your strategies towards the last hour to mimic what's happening here. Because for the past 12 months, actually even a little bit longer, this is what's been happening. As always, I appreciate your comments. Now, there are 3 things ripped from the headlines that we need to go over so that you're ready for tomorrow. Number 1, McDonald's fell 9% after hours. CDC said there was a severe E. coli outbreak linked to the restaurant chain that sickened 49 people and caused 1 death. There's a couple key things with this. It wasn't one burger that did one thing. It's something's completely tainted. 49 people got sick, and thank God there was only 1 death, okay? I think this is really important for people to get. Now, the majority of people will blow this off and not think it's a big deal. It's a very big deal if people stop going to your restaurant. Okay? Very big deal. We saw this with Chipotle, and a lot of people will tell me that's not how to pronounce it, and they'll miss the point. The point is that when this happens, you want to pay attention to it. After hours, the most important thing you can do is put a VWAP here and then watch how you watch that VWAP. You could also, of course, just drop a session here where you're looking at the, where you're going to see the volume profile, and you can see that down here, and you're watching your value low. But I'm more interested in point of control and how you're acting. Can this trade up? I wish it would. I wish it would, because I can tell you right now this is going to be a problem. Let's say no one else goes and nothing else happens, hopefully. But no matter what happens here, right, this is a big issue for them. And people, they will lose sales. Believe it or not, they will. I've seen this story play out several times in restaurants. It's a problem. The fact that it's trading up, I did have a short on. At the time of recording this, I'm not short at all. I covered it, made a little bit, and just moved on with my life, and I'll review it for tomorrow. But this is going to be a big, big story, guys. Some of these, you're in a micro situation right now. I'll show you what I mean by this. So, like, if you take a look at PM, right, and this is one that I really did not pay attention to today because I was so focused on some other names, but you look at something like PM, and they're absolutely crushing, probably raising the dividend at this point, 123, 131. And you're seeing some of these names move, like GE, fall completely apart. GE could not find footing today. And this is an issue because you did close below the 55. So you need to hold here, because if you don't, that's a long way down. But 3M was really good. Like really good. All we did was take out the all-time high and reverse. Now, this is the definition of a control bar. So you really want to watch these, because these are setting up to not be great, is the best way that I can say it. These are setting up to not be great. And there's certainly areas of interest here that you're going to want to pay attention to, because when this starts to set up this way, it can become a real problem. And this is something that, of course, you're going to want to watch with both these names. But you have the earnings this week, and so you want to stay focused on the micro. Case in point, Texas Instruments. Everyone thought Texas Instruments was going to be bad, including myself, and they actually came out and beat. And guidance was not as bad as they expected. So what started to happen after hours is this, and it's worth noting. As they went into after hours and the conference, apparently it lifted. I have not listened to this conference yet, but you did hold in here. Take a look at this. You did hold in here, and I'm pretty sure the conference is this evening. But again, I don't have that data in front of me. But you see the undercut, the lift, and then you just held that level. That's really appealing. And so when you mark off those closes and watch how you act at the close, and you can see how all of a sudden that resistance held, that becomes support, possibly. There's your test of support, and then you lift, and this is what you're doing into the close, which is good. But this could actually drive the SOX tomorrow, and I think it's important for us to go over that, because if you look after hours, you can actually see the SOX trading up, and you'll see it a little bit more here with the SOXS, or XOXL rather. You see right here how we closed at 4 o'clock at that 34.42, and now you're up here at 35.10. So you are seeing a little bit of a lift there. And then womp womp, we have ENPH, which is basically a dumpster fire with a bunch of raccoons floating down the river. Just an absolute bloodbath of a mess. And then they lowered guidance again. These names are just on their death march. They're so short that I just think that they would go even lower. I think there might be some kind of bounce. So, you don't even really want to short them. But that's just very simply not the case, and we're just seeing that very clearly here. So this, of course, is something that I think can continue, but I would look at these tomorrow. And again, you're really just starting these, like the death march of these names. This is a massive base, and you're breaking that. And, you start going through some of these names and going, how low can they go? Well, if you start looking at this from 24 on, we were at $77 at the beginning of SEDG on the year. You're at 16 and, probably going to what, 1? ENPH is probably in the same kind of boat here, where eventually this thing will fall down. I'll get a lot of comments where people will tell me that won't happen. You'd be surprised what can really happen, how far some of these names can drop. And I don't really see what's going to hold this here. I truly don't. I don't see any reason that you're at least not going to test this 72 level right here. I really don't see how that's not going to happen. So I think solar is a bad day. And I think semis look pretty good. Also, some of the Chinese are shaping up, but we'll cover that tomorrow in the pre-market. Have a great night, everybody.